Happy Friday, everyone. Thanks for joining us today on this edition of Business Daily. I'm June. Let's get started with a glimpse of today's highlights. More plans on expanding the virtual reality sector come from the government today, including a pledge to invest over $360 million over the next 5 years. Samsung's Q3 earnings seem to have emerged relatively unhurt, even with the massive recall of its Galaxy Note 7 last month. These stories and more coming right up. The Korean government is looking to further develop the virtual reality industry after designating it as a strategically important ICT sector earlier this year. For more on how the government is doing this, here's our Kim Ji-yeon.
The Ministry of Science, ICT and Future Planning has released its plan to expand and promote the virtual reality sector, including applications to the fields of gaming, manufacturing, medical services, defense, and education. The government and private sector will invest a combined $363.3 million into the sector through 2020. The funds will be spent on technological developments to enhance the user interface and experience, VR platforms and sensors, and lighter VR devices. The ministry is also planning to set aside another $35.9 million next year for research and development to expand capital investment in the field, boost technology, and increase the number of experts in the country. The overarching goal is to help reduce the technological gap with the U.S. from the current year and 7 months to 6 months by 2020.
The ministry will try to increase private investment in VR by including the sector on the country's list of new industries eligible for R&D tax cuts. We will also make efforts to promote Seoul's Sangam-dong area as a hotbed for local VR industries.
The ministry has already made some progress toward bringing big conglomerates and small and medium-sized companies together through the ministry's 5 VR flagship projects in August. Investments have been made to support 14 local companies, including Korea's main terrestrial broadcaster SBS, for the production of VR content containing K-pop. The development of cinematic content through the multi-screen ScreenX is being developed by 15 companies, including Korea's leading content developer and distributor CJ. Investments are also being made to support local companies, including Lotte World, on the development of VR theme parks, as well as indoor VR games for exports into China and Vietnam. Lastly, investments are being made to support 10 companies, including Hancom, for the development and distribution of education content that incorporates VR and augmented reality technology. Kim Ji-yeon, Business Daily.
And the Korea VR Festival, displaying the nation's virtual reality technologies and its products, kicked off on Thursday to run through this weekend. And today, President Park Geun-hye visited the venue as Sangnam DMC, which the nation is looking to foster as Seoul's VR hub. The president asked engineers to take the lead in innovation and to add value to the VR industry by collaborating with the sectors of culture, medicine, education, and even military defense. Since designating augmented reality as one of the nation's 9 strategic projects earlier this year, the government has been stepping up support and investment for virtual reality, considered a key field in the 4th Industrial Revolution. Samsung Electronics has posted better than expected earnings in its guidance for the 3rd quarter. Despite the fiasco caused by the global recall of its Galaxy Note 7 smartphone, an uptick in the company's chip and display businesses likely negated its impact on Samsung's bottom line. Our Kim Min-ji has more.
Samsung Electronics' 3rd quarter earnings estimate has topped expectations despite a global recall of its Galaxy Note 7 smartphone. According to the company's earnings guidance, operating profits stood at 7.8 trillion won, or nearly $7 billion during the July to September period. That's up about 5.5% from a year ago, but down over 4% from the previous quarter. Sales likely fell over 5% on year to $43.9 billion. The operating profit beats a recent market consensus by roughly $300 million. This comes despite a global recall of the Note 7, which is estimated to cost Samsung up to $2 billion. The tech giant has been offering replacements or a refund after some reports of the device catching fire while charging. Sales estimates for the Note 7 have also been revised down to below 10 million units, from an earlier projection of about 14 million before the recall.
Although Samsung didn't specify the amount of losses it incurred from the Note 7 recall, the mobile division's operating profit is expected to fall under $3 billion. So we can say the company's better-than-expected performance came from its other sectors, like chips and display.
Analysts say this is mainly due to rising prices, buoyed by increased demand from smartphone makers due to new releases, as well as more orders for personal computers. Samsung will announce its finalized earnings later this month with a breakdown of performance by sector. Kim Min-ji, Business Daily.
And moving on to markets. To give us a wrap-up of this week's stock market action, we have our Business Daily's markets contributor, Choi Jin-seok, joining us on the phone today. Hello, Jin-seok.
Good afternoon.
All right, so as we close the week, how's the last day of trading?
On Friday, the Kospi fell by 0.5% to close at 2053.8, and the Kosdaq followed with a 1.2% decline. The Kospi market opened with a slight uptick, but soon erased early gains and even expanded losses in the late hours. Ahead of the U.S. employment report this evening, investors seem to be in a wait-and-see mode rather than adjusting their investment portfolio. Despite a buying spree from retail investors, institutional investors who unloaded large amounts of shares spooked overall market sentiment as well. Samsung Electronics, though, continued its rally for 4 consecutive sessions. After U.S.-based activist hedge fund Elliott Management called on Samsung to implement capital return programs and streamline operations, the company's share prices recorded an all-time high on Thursday. Its Q3 earnings guidance announced today were also above market expectations, and that's why Samsung extended its positive trend today.
And foreign investors continue to buy shares during the week. So how is the overall market performance this week?
This week, the Kospi market moved just like last week. The market had enjoyed a decent rally throughout Thursday, but Friday's session lowered expectations for a further rally. Until Thursday, the index had surged by 1.1%, while the Kosdaq had risen by 0.5% as well. Despite the so-called Hanmi pharmaceutical scandal that hurt the biotechnology sector, large-cap stocks including Samsung Electronics helped the index close the week with a positive footing. But there was still not enough steam to lift the index above 2100.
Now, what upcoming market events should investors be looking forward to? I mean, global financial markets will definitely find future directions after those U.S. employment numbers are announced today.
Exactly. First of all, if the U.S. labor market created a decent number of jobs last week, expectations of an imminent interest rate hike will rise. So a strong jobs report might prevent global asset markets from going higher in this regard. The U.S. earnings season will kick off with aluminum company Alcoa announcing its quarterly results on Monday local time. As global investors are eager to see improvements in the real economy to support recent positive trends in stock markets, this earnings season is expected to draw a lot of attention. This has been Choi Jin-seok for Business Daily.
Korea's transport ministry has ordered 5 automakers, including General Motors and Honda Motor, to recall hundreds of faulty vehicles. The ministry said on Friday that a total of 853 cars, trucks, and motorcycles made by GM, Honda, Mercedes-Benz, MAN Truck and Bus, and Scania are subject to the recall. GM's Spark electric vehicle accounts for about half of the models recalled for airbag-related issues, while Honda's CBR 300R motorcycle makes up the other half. Free repair services are currently available at service centers of the relevant auto companies. It's Friday, and that means it's time to dive into some important global business news. For that, we're now joined by our Eunice Kim in the studio. Hello, Eunice.
Happy Friday.
All right, so some say the global economy stepped into more uncertainty this week after UK Prime Minister Theresa May put forth a deadline to invoke Article 50 by March next year.
Yeah, that's absolutely right. And we're already seeing those jitters in the form of the sterling movements this week, as onlookers view that the UK could be on course for a hard Brexit over a soft one that tries to hold on to its unfettered access to the EU. Take a look.
It's been 85 days since Theresa May moved into 10 Downing Street, and this week the UK Prime Minister offered some direction as to what Brexit means On Sunday, ahead of a party meeting, she announced Britain would soon be ready to trigger Article 50. In fact, that it would come no later than March of next year to start the 2-year countdown to leave the EU. Throughout the week, the sterling dropped, hitting new 31-year lows as the FTSE 100 soared.
Because so many of the companies that are constituents in the FTSE 100 make most of their money externally to the UK, i.e. they're exporters. I think around 70%, maybe even more, of FTSE 100 revenues come from overseas. The pound falls, the goods and services that those companies sell become cheaper to foreign buyers, and the market believes, therefore, that they will benefit from that and share prices rise.
The British pound continued its descent, breaking below the psychologically important $1.27 mark on Wednesday morning, only to be pulled up by better-than-expected service sector PMI data. But then it enters a freefall after Thursday the 6th, when Prime Minister May takes a hardline stance against the, quote, international elite, promising to make capitalism work for all, including the workers that make businesses work. She also makes clear that being a fully sovereign and independent country means taking back immigration control, as the country forges what she called a bold, new, confident role on the world stage. Given the timing of her self-imposed deadline announcement and the suggested priority given to immigration over EU market access, many are bracing for the historic negotiations to be for a hard Brexit.
Britain decided to go for a Brexit. In fact, I believe a hard Brexit. Well, we have to follow through with Britain's wishes to leave the European Union, and we have to be firm. If not, we will put into question the EU's principles, meaning other countries, other parties, might get the idea to want to leave the European Union to get supposed benefits and at no inconvenience or with no rules.
Now, a hard Brexit would suggest more contentious negotiations and, of course, a more, firm divorce from the EU. So at this point, I'm wondering, why would Prime Minister May show her cards and tell the world when she intends to trigger Article 50?
Yeah, that's a fair question, and it's certainly a question that a lot of people have been scratching their heads over this week, even inspiring some criticism from financial circles that may put rah-rah politics, however well-intentioned, to reunite the divided country ahead of leveraging Britain as it heads into what promised to be tough negotiations. And then there's the issue of immigration. It turned out to be a more hot-button issue than many Remainers had projected leading up to that June referendum, and Prime Minister May's government appeared to be honoring that concern that foreigners were taking British jobs with the EU's free movement clause, even though UK unemployment is at an 11-year low of 4.5%. In fact, the May government is said to be considering requiring British companies to report how many foreign workers are on their payroll to pressure them to hire locals before expats, a move that's being received with disdain from companies as well as foreigners, and also the mayor of London, where 40% of its population are from other countries.
Well, meanwhile, the EU is under pressure to hold the Eurozone together, especially with key elections on the calendar in the coming months. And I also hear that there's one out-of-the-box move that the bloc is planning for their young members.
Right, out of the box indeed, and this would exclude young people from Britain.
Okay.
The European Union is said to be considering gifting teenagers in EU countries a rail pass when they turn 18 years old. Now, this rail pass would have 407 euros credited to it. That's about $450, and they'll be able to use it over a period of 1 month to travel anywhere on the European continent. It's still in the planning phase, but supporters say the program would be a good way for young people to not only make friends across the continent outside of their countries, but also experience for themselves the value of the EU at a time when, of course, sentiment about the EU could be better, and many are also stuck in low morale amid high youth unemployment in some countries.
One out-of-the-box idea indeed, but I would have liked to have that when I was 18.
That's pretty cool, right? It's good to be a teenager in the EU if it passes, of course.
Right. Thank you so much for coming in today.
My pleasure.
And that wraps it up for today and this week. Thanks so much for watching, and we'll be back next week with more at the same time, same place for your Business Daily. Until then, goodbye.